Hello traders and welcome to tradingwithbill.com. It is a Wednesday, as I used to say, hump day in our trading week. Traders, it's November 8th, 2017, coming to you from Thailand. Currently it is, 8 a.m. in the morning, which means it's 2000 hours on Wall Street on a Tuesday night. Traders, great to be with you. We're going to talk Forex. And just let me go over my charts for a second, because my whole situation with my charts are all different now. So these charts have, like the other charts had, some exponential moving averages. So let's get over it. Let's go over it. The yellow one is the 5 exponential moving average. The red one is the 20 exponential moving average. The teal line is the 55 exponential moving average. And the green line, as always, is the 200 exponential moving average. So we're going to talk about the Aussie dollar today. And what we want to look at the Aussie dollar is, we want this to pull back up to that 200 exponential moving average. We have no room to take this trade at the 55 EMA, which of course is that teal line. We don't have no room there. You're going to end up trading right back into support. Not a good move. So we're going to wait for this to pull back to that 200. And hopefully within time, the EMAs will get on top of price, help it push it down. So that's what we're looking here on this New Zealand trade. I'm sorry, this Aussie trade. Did I say New Zealand? No, Aussie trade. New Zealand was yesterday. So now, if you remember yesterday, we had data come out, and apparently the markets didn't like it. If you take a look here, you can see this spike when the data came out. And basically, 3 hours later into London, just before London opened, this thing just decided to close below that 200. Now, I missed this trade. I did miss this trade. And this was really nice. It pulled all the way back down, and it really didn't give you a second chance to get in it. It was a one-shot deal. There was really no other entry after that. Normally, you might get a retest of the 55 or something, or even the 20, and it didn't do that. So, you know, this move was really nice. Now we're hoping that we can get a decent pullback. And, you know, we're looking at like the 78% fib is where that 200 exponential moving average is. So this thing's got to truck up quite a bit to get to where we want to enter this trade. However, we got to be patient. We're going to wait. You know, there's really not a lot of data today, so we'll just see what happens. All right, let's take a look at the euro dollar. So this trade, you can see this never gave us the follow through, right? This just never gave us the entry that we wanted. It broke through that 200, never gave us a pullback, never did anything, and that was it. This trade was gone. So let's get rid of this stuff. What do you think about that? Let's get rid of this. Let's get rid of you guys. Okay, there we are, back to a nice chart. Now, there's nothing to do here either. There's no trade here on this euro dollar. This euro dollar is sitting at a spot that we can't enter a sell trade. And really, do you want to enter a buy trade? Because you're buying right into resistance also. Nothing to do here. Again, this is a pullback that we need to that 200 exponential moving average. Let's take a look at the pound before we move on. Now, this pound trade is interesting to say the least. But we got to get rid of all this junk here. Oh, come on. Yeah, let's get rid of that. There we go. So this pound is now, you know, in a spot here that it looks to me that this might just continue to the upside. I don't like this pound trade because I want to sell this, right? I want to sell this. But we're selling right into the 20, the 55, and the 200 exponential moving average. That's not a trade of my liking, my friends. Not a trade of my liking. However, why don't we stick a fib on here? We're going to take it from the high. Well, you know what? Let's just do the current swing. We'll just do the current swing. I don't know what happened there. Yeah, let's. Why is this doing this? William? William, what's going on here? Why can't I get this here? There we go. All right, let's pull this across. Yeah, this goes right on in there, huh? So if we take a look at this trade, right, you're seeing it's just a bad situation here. So what we want is we want this to come up to this 78.6 fib, right? And we'll take it there, right? We'll take it to 78.6 fib. There's nothing to do here, right? Okay, nothing to do here. I have a commentary today, and my commentary is talking about the market. So we're not going to probably look at oil or anything today or any of the news today, but I think this is really important. It's important that we understand how we are going to deal with this market and the moves that it's making. The market is making moves. People are making profits. Pips are being made. The difference between before and now is a pair that moved like the Euro Aussie 150 pips a day is only moving 60 or 70 pips. Okay, that's the problem. The problem is when we got into a trade before, we can be out of the trade in 2 or 3 hours. Today, you're in that trade for 5 hours or 6 hours. You need to stay mechanical. You need to stay mechanical. You need to do it by the rules. Don't get your emotions in it. Don't get anything into your trades. Stay mechanical. Remember, my friends, trade small, like 25% of your normal lot size, but trade a lot. Be in 5 or 6 currency pairs in your trading day. Traders, thank you so much for being with me. TradingWithBill.com. We'll talk about this more as time goes on, about the sentiment of the market. Traders, catch them all in Asia, bright and early. Traders, remember to trade safe and trade smart. See you tomorrow. Bye-bye.